Hi, this is Tom Nunamaker with Aeromir Corporation. This is a trade review for the 3rd of March 2023. It was a rough day today, but we ended up in the black. But boy, it was a rough one. So let's see how it went. So here we had the opening. These are 1 minute charts. So here's 1 minute, and then 1 minute and 11 seconds after the open, I sold this iron condor. So market was at about 39.97. So right about here. So that's the money strike. And yeah, so it started going okay. Stepped through it. First 10 minutes or so, we were up some money. It's kind of bouncing around in a good range. I was actually up about $150, I think, at one point. And then, let's see, 52. We had this big jump up, another big jump. So at this point, at 52, I think that's where we are. That's 46, so we hadn't done anything yet. Came back. Now it's at 48. Just seeing if it was going to stabilize. Came back a little bit. Then it had a big move higher. And now it looked like we're kind of trending higher, right? So like, well, it's time to cut these calls. So at this point, the market's at 4,006. So it's about 6 or 7 points above our midpoint. However, this is a pretty strong move. So you don't want to just let it go because, we were, I think I had been up and then now it's about break even, maybe down a little bit. So I started peeling off some of the short strikes. So at 52.30, I peeled one off, turned it like this, so it extended the break even. And then a couple minutes later at 56, so there's a place that shows the time, 55, 56, it's still rallying, but you can see it closed way up here. So okay, time to take another one. Now it's a 14.13, so it keeps moving higher. So let's extend this again. And now we've extended the upside break even. Remember, it's about 13 at this point. And then started selling off. Pretty good move down. So didn't want to get caught with all these short calls gone. So it went back to 4,006. So it sold off 7 points. Started coming back closer to the midpoint of the butterfly. So another minute. That's 8:01. Okay, so here we have a big move down at 4,000. Now we're back at the short strike. So I didn't want to be this unbalanced. It was kind of leaning negative delta. So I decided to resell those calls. Well, we bought them in for $35.40 and then sold them again for $25.60. So we're down quite a bit of money just on the calls there. So, but we're balanced again. We're underwater, but we're the puts are still making money. But I think we were down quite a bit of money, like $500 maybe. I can't remember exactly. We were definitely underwater at this point. But we got it back to balance. We're back in the center, and we're just down money. We just need to have data come out. Had a pretty good theta, I think about 8,000 theta. So, it was good as long as we stayed in this area. So we had rebalanced it at this point, and now that was 8:02, and 8:02 is Mountain Time. It's 10:02 Eastern. So here we go for another few minutes. It's kind of bouncing around. Actually went. Well, this is still pretty close to the midpoint of the butterfly, and this is what time? 10:08. It should show me what time it was on here. No, we're still going. Now it's starting to rally again. So now we're 1.7 points above the center strikes. The center strike's right here. So we're still okay. And now we're starting to rally again. So here we are at 10:13, 10:14, another big move up again. Now we're at 4,008. So now we're almost 10 points above the center point of the butterfly. So let's start cutting the calls again. So let's start doing that exercise. So we cut this one, and then another minute later, still rallying. Let's cut another one, and we kept going until 25 after. So 25 is about here. A couple more bars. Still pushing higher. So I think this is where 23, 24. Okay, on this bar, I said, okay, I got to cut this this last two calls. So that basically turned it into a risk reversal. So at this point, the market's at 40.16, right about here. The expected move was a little bit outside of the expiration break even, so it's actually not a bad trade to just leave it on like that. The P&L at expiration was here. The market actually closed much higher. Let's see what it closed. Closed at 45. So actually, it would have closed right about here and made about $670 for the day, which would have been a great day. However, this was still a lot of negative delta, and it wasn't that far away from the short strikes. And we've been reversing a lot. So are we going to reverse again and then start, getting hit? Like, down here at 39.98, that's about where our break even was. So we didn't want to get really underwater. Here you'd be down $2,000. So you don't want to let that happen. So I wanted to sell some premium. So I sold the 40-50 calls, which are up here. Just get rid of those extra ones. As I sold them for $1. I bought them for like 10 cents, but they exploded up to $1. So I closed those, and that created basically a short put spread. And now we got $1,070 of premium up here. But again, the market is at 40.16, so it's really not that far away from here. And the expected move, I think, was still past that. It was like down here somewhere. So it wasn't very comfortable to leave it there as a short put spread. So I decided to roll the puts from 4,000 to 95, just roll them down a little bit, use up some of that premium. So the premium went from 1,070 to 530. So I used up quite a bit of premium to roll those puts down and make it a bit safer. And that was at I got a log here of the trade. So that was the 135. There it is. It was at 8:53, so 10:53. So that would be still quite a ways in the future. Here was about bouncing around. This is 42, so another 10 minutes. It's 49, 50, 51, 52, 53. So it looked like we were starting to head lower. So that's when I rolled those puts down. Again, just 5 points, not a lot, but I did use up some premium to do that. And then the next adjustment, let's see, try and keep these here. 59. So that was a few minutes later. This is 53, so 6 bars. So here, I decided to sell some call spreads to bring in some premium. So I sold the 40, 30, 40, 75 call spreads once, brought in a little bit. Actually, I sold 4 of them. One got filled at 285 and the rest got filled at 280. So this is actually one order. So I basically recreated a condor, and that made the deltas more neutral because we're at 40.11. They were kind of right in the middle of the condor at this point. So I just kind of balanced it up, get some more premium in there to play around with if it starts moving again. But I just tried to get it back to delta neutral. And again, we're underwater at this point, but the trades, it's looking okay. The expiration break evens and the expected moves aren't too far away from each other. And then I wanted to get some more premium to play with, so I went from 4 to 5. I sold one more condor, basically the same strikes. And then that was at 9:03. I sold that. That was right here. And then the next thing I did at 18, I bought some calls. So at 18, let's go to there. 18, so 5:15. What time that is? It's 15. Bought those calls at 18:49, almost 19. Oh yeah, so it was one bar before that. So right on this bar, market looked like it was starting to rally. It was getting up near this top of this range. Looked like it was going to break out. So I decided to buy in a couple of the shorts. At this point, we have a 5 lot, I think. So I bought in 2 of them, and I did this. Just cut it to the upside. And again, we're up around 40.16, so we're a little bit north of the center of the butterfly. And then the next thing we did was 33 minutes after the hour, so right about here. Let's go a few more bars. So it's kind of staying in the range, but here you can see it's starting to break out. Came back, now it's coming back down. So at this point, 33, I bought the verticals, a 40-30, 40-40 call. So this one right here. And that just basically rolled this short call up 10 points. Again, use some premium. So now we're kind of running out of premium, but we've widened this out because the market's getting it's still kind of moving a lot, right? And then the next thing we did, that was the 250 cents. So that was at 940. So here we are at 36, 37, 38, 39, 40. At this one, 40. Then I rolled the puts down 5 points. I just wanted to make it a little bit safer. They get the expected move more inside the position. So that rolled the puts down, kind of widening things out, right? And then that was 80 cents. And then next thing was 10 minutes later, 50. 2, 3, 4, 5. So it still looks like it's trending higher, right? So at 50, then I sold some put spreads, some 39.85, 39.65s. So I sold some just outside of the ones we already had. So just to bring in some more premium, just bring in another $150 of cash, increase the margin a little bit. And now we're at 23,540. And now we've got $460 of premium up here to play with. And at this point, the market's at 40.17, so it's right in the middle, right where this red line is actually. So we got that done, and then the next thing at 265, that was 10:11, so that was 21 minutes later. See, the market's just heading higher, but it stopped. Now it's starting to push higher again, right? So at this point, we're like, well, we got to defend this because right now it's a 40.26. It's up here, starting to get close to this short strike. So the next thing is I bought 3 of the 5 calls. Well, actually, I'd already closed 2 of them, so I bought in 2. So this bought in the other 3 and basically flattened it out. But it's negative at this point, the premium, but we do have no risk on the upside. So I bought the put spread back for 60 cents, and then the call spreads, or the other puts that I'd sold, and basically said, I've had enough. This trade is not working out. And one of my rules of thumb is if I wouldn't put this trade on now to start with, why do I have it now? Is there a good chance it's going to finish in the black or not? And it wasn't looking good. So, at this point we were down I think it was about $700. These T+0 lines were pushed down here. So I was like, I'm going to close this and kind of restart with a new trade. I left them these 5 long calls on just because they were trading for about a nickel. They weren't really, it's going to cost you 5 cents to sell to close in it. So you're not really going to get anything, but they are there if the market has a massive rally. So that was the first trade. And that first trade ended up with commissions and fees and everything down 792. So I had some work to do. So the next thing we did, let's clear these out. Remember, I still have those 5 calls too. They did expire worthless, but so about 3 minutes later, is that 18 or 17? No, 13. 17, 18. Okay, right about here. I sold 5 iron condors. Let me just pull that up. This was the second trade. Let's now check all these. So I sold this iron condor, and at the time we were 24, so right about here, that's the middle. And obviously this P&L would have been 0 when I sold them. So that was at 18, and it stayed pretty good until 52. So let me just take a look here. It's going sideways for a while. There's 39, 40, 2, 3, 4, 5, 6. And then at this point at 52, it looks like it's starting again to break out to the upside. So we have to address that. So I bought in 2 of the 5 calls. And then at 58, it's 57, 58, still going higher. So again, I'm trying to get rid of those extra calls. So I bought in not the third one out of 5. And just again, cutting the risk down, moving the expiration break even out. And then it's still going higher. It's making me work today. So that's a 1, 2, 3. So at this point, we're up at 40.32 right here. And, it's definitely trending higher at this point. So we're at risk if we keep going. So one thing I wanted to do is close out the those junk calls as 75. So I bought back, well, here, actually, the +2, where is it? Edit, 11. So at 11 here. So after this run up, it's like, okay, I want to close the rest of these calls. So again, it's a risk reversal now, and the market's up at 32 right here. Expected moves probably around 20, 19. So again, it's just outside this expiration break even. So not the most comfortable thing. We're negative delta, the T+0 lines down here. And then I sold out these extra calls right here for 10 cents. So basically now it's just a short put spread. And then we were going along till 20. This is 3, 5, 6, 7, 8, 9, 10, 11, 12, 20. That should be 20. Up 18, 19, 20. Okay, so here we are. Market starting to sell off. It's 31. So now we're only, about 15 points away from that downside break even. Deltas are negative. Market's trending down. I didn't know if it was going to keep going all the way or if it was just pausing on the way up. So I wanted to sell some calls and get kind of make the delta more negative, right? So at this point, I sold 5 call spreads for 65 cents. But I was still kind of close on the put spread. So I sold those for 65 cents, and then it cost 65 cents to roll the puts down. So there I just rolled the puts down. Was it 5 points? Yeah, from 40.15 to 40.10, just to make it, more of a balanced iron condor. So that was at, let's see, what time did I do that? 65, 65. That was 23. So that's right about here. Then you can see it's heading lower, so I wanted to extend that downside break even a bit. And then at 27, so a couple minutes later, 25, 26, 27, I wanted to bring in a little bit more premium, so I sold 2 put spreads, 4,039.80, so a little bit, so 10 points outside of the shorts I already had, to bring in a little bit more credit, like $60. So that bumped this up to 1145. And then at 1221, so it went quite a while now. It's going sideways, or the condor is working pretty well. Where are we now? That's 1421. It's a lot of sideways movement. And at this point, the trade's getting more profitable. Now theta's coming out, 21. 15. At this point, we're at 38. We're still not too far off from the middle. And that's 19, 20, 21. So at this point, they bought in the 40-55 calls. And then 2 minutes later, I bought the rest of them. So at this point, again, the market looks like it's heading higher. So I converted this to a risk reversal again. And the market's at 40.38. And this is actually still fairly safe. The expected move was inside here, or something like this. So it was actually looking pretty good. So let's see, after I bought those at 23, I decided just to close the rest of it, except the extra long calls, because those are still pretty cheap. And then that put spread that I sold for 30 cents times 2, that was super safe at this point. So I just decided to leave that on, but basically closing down the rest of it, freeing up some margin so I can put another trade on. And that trade total made $583. So at this point, I'm $792 and then $583. So I'm down $209 at this point for the day. So that's where we are at this point, and this is about 2:25 p.m. Eastern time. So again, we're down $200. Still have some work to do. Still have a couple hours before the market closes. So let me import the last trade and turn all these off. So I did a 4-lot iron condor for $3.35, and that was at 12:25. So that was 2 minutes later. It's right here. Again, I wanted to center it, and I knew I was going to be bringing the wings in because we're getting closer to expiration. There's 2 hours. Well, an hour and 40 minutes to the close, really. So this is the condor that I put on. It was about 14.6 of margin. And then, just trying to get some data. So at this point, the market was at, it was almost 26. So I'll just call it 26. It's right about here, 40.39. So this was the center strike of the condor. And then 34, so 9 minutes later. Oh, that's 35. So right here, the market again looks like it's trending higher. I don't know how it's going to go. So I started buying back some of the calls. So I bought this. And then, we're again moving the expiration breakout or break even higher. We still have good data. Just change this to fixed. You can see it better like this. So at this point, we're at 40.41. So still centered on the condor. And then, so that's 34. Let's close in 37. They sold them. Okay, so 37. You can see we started heading downhill again. There's 38. So then I basically resold the calls, and we make that back to float. So I balanced it back again. again, because the market's been really trending a lot today, and so it's kind of hard to keep up with some of these. And then the next thing at 50, so that's another 12 minutes. Right, two more. So at 50, and I bought in the 40, 50, 40, 55 call. So I was basically wanting to widen this out and make it a little bit safer because the market had run up. Expect the moves is starting to shrink some more. And then I wanted to try and kind of saften up this thing, if you will. So I did a 4 lot originally. So I just moved the call spread, the short spreads, the short calls up from 40, 50 to 40, 55. So not a lot, just 5 points. And then that was at 34. So a couple minutes later, here it's 30. Okay, the next thing I did was at 09. So 09, 9 more. 6, 7, 8, 9. So again, the market's continuing to rally. So I rolled the calls up another 5 points. So it went from 55 to 60. Again, just trying to keep it away from the current price. And now we're down to $340 a premium. Spreadsheet so I can see the time stuff. Okay, and then a couple minutes later, market looked like it was coming back to the middle of the condor. Right here, it was kind of staying 46, so right about here. So it was dead center in the middle of the condor. So I decided to sell 2 more of them to bring in more premium. So here's where I sold 2 more for $1.05 each. And now that went from a total premium up here of 340. Now I've got 550. So again, more premium to play with. At this point, the trade is profitable. We're starting to run out of time. This is about 46 minutes before the close when I sold those last 2. And then at 27, let's see where we're at, 27, 8, 3 more right here. Okay, so we're at 44. Again, we're dead center of the condor. And I bought the puts for 30 cents. Just rolled them out. Went from just some of them. I had 5 set on my spreadsheet, or 4 set in my spreadsheet. I should have had 6 because I actually sold 2 extra ones, but I forgot to put them on my spreadsheet. But I wanted to roll the puts down 5 points, so I did, and I saw, well, that's not flat. So I checked, I didn't do all of them. So then I did the other 2 I was missing, and that flattened it out. So now my downside expiration or break even is 24, and we're at 46. So the expected move, I think, was like 12. So the expected move ratio, where you divide that distance from the current price to here, divided by the expected move, was over 2, which usually means it's like a 5 delta or less. So this was getting really safe. This was getting safe. And the market basically just stayed kind of in a fairly narrow range the rest of the day. And let's see, what time is this? 49. That's 10 minutes before the close. I actually have a, I'll make this a little wider. I got my fake little finish line here. So you can see where the close is. And we're getting, we're bouncing around 40, 41. The expected move ratios, I think they're on here. At the end, they were 12 and 9, so they were super safe. So I just let it go into expiration, and the market ended up closing at about 45. So again, right in the middle of the condor. So all this stuff expired, and that trade made $335. So all told for the day, when you add everything up, net profit of $126. I had really long time in trade, over 2.5 hours. It was a grueling day trying to keep up with this. It was a grinding market, kind of volatile, moving around quite a bit. And I was just keeping up with these things to keep it balanced, keep the deltas low, try and keep the expiration break evens away from the expected moves, that kind of stuff. So my profit factor today was 1.16. I had one loser, pretty big one, but more, 2 wins, 1 loss, the average win, average loss, and gave a profit factor of that. So bottom line is it works pretty well to take a spread like this, and then as it starts getting in trouble, market starts moving up, start taking off the bad side, and then if it reverses, then you can just sell it again. And then when I think it was on the other trade, when I wanted to add some more premium, I was short, say this strike, then I took one like 10 points lower and sold the spread like a 10 or 15 or 20 wide to bring in more premium, because you're going to have to defend this one first before it gets to that one. I know eventually you roll it down if you need to, and then now you'll have more strikes to deal with, but it was actually pretty safe. It was like a 5 delta. It could happen that the market goes down that far, but odds are it won't. And, I just bring in some more premium, but you just have to be where it's there. So that's it. Again, I'm exhausted. For the week, by the way, let's see. I think I was up, let me just do the whole week, all my trades. So for the week, I was up $2,108, hit 21 winners, 5 losers, profit factor of 2.65. I made 33.86, lost 12.78, so on $8,000 a margin. So pretty good yields overall, I think. I'll say about 25% yield for the week on the margin, on the average margin that I use, but 26 trades for the week in 5 days. So that's about 5 trades a day, 5.2 trades. So that'll do it. Have a great weekend, and I'll do another one of these on Monday. Thanks.